Kate, talk us through your article. You very wisely hedged your bets, right? I mean, you've been very sensible as the economics correspondent of the Spectator. You haven't fallen into the trap of making explicit forecasts. I'm going to try and push you into that trap now, though. What do you anticipate is going to happen? I mean, you point, it could be below 0%, above 4%. I mean, how useful a prediction is that? I think I was talking about the dog that didn't bark. I think I can't recall in your article, you mentioned the tiger of inflation, don't you? Is this going to come? I mean, it should have arrived by now, right? I mean, we've been rolling off money off the printing presses. What on earth is going on?
Look, if the MPC is that unsure, there's no way I'm going to give you a better prediction.
Damn you.
There's just no way I'm going to be able to do that. But I think the landscape right now is absolutely fascinating. As you say, Mark, after the financial crash, many fiscal hawks said the headline rate of inflation is going to soar, and it didn't. Now, as you pointed out, and I know Steve has spoken about this before, we did see inflation in asset prices. We actually saw quite major inflation, but that is not exactly what was predicted. And the Prime Minister's school of thought is, well, the fiscal hawks were wrong last time. They're probably wrong this time. And up until about a month ago, the economic consensus was that these incredible circumstances for borrowing are going to stay. They're here to stay. The economic rules don't apply anymore. Nobody needs to worry about this. What I have found fascinating to follow over honestly a matter of weeks is the extent to which this consensus has started to break down. So you have Larry Summers in the US, by no means a free market guy. I mean, he was Treasury Secretary to Bill Clinton, Obama's economic guru. He has been warning about hyperinflation coming from the Biden stimulus package of $1.9 trillion. Here in the UK, you don't have people making such bold assertions, but I would recommend for reading after this, go and read Andy Haldane, the chief economist of the Bank of England, the speech that he's published called Tiger by the Tail just a few weeks ago. Now, his speech is named after Hayek's metaphor for inflation, which is comparing it to the tiger. Basically, once the cat's out of the bag, you can't put it back in. That's the really difficult thing about inflation is you may not see it coming and then all of a sudden it explodes. What's fascinating is that Haldane isn't predicting major inflation, hyperinflation, but he's talking about how the circumstances are really different than they have been in the past. We just don't have a real world example of suppressing the global economy the way we have, and then it's springing back open. And we don't necessarily have the de-inflationary measures that were there before. China coming onto the world scene, the labor market becoming cheaper, globalization, goods getting cheaper. We don't necessarily have what we had before to depress inflation. And again, not making predictions, but it's interesting to see how quickly this narrative has changed. And frankly, it was a big part of the budget that we saw a few weeks ago. Everyone was talking about tax rises, like how can a Tory chancellor, free market chancellor, be bringing in these tax rises? Well, behind those tax rises is a number 11 that is really worried about inflation, about interest rates, that if these start to move by even 1%, they're looking at having to find billions of pounds, tens of billions of pounds to pay the UK debt. So to pay off the UK bills, I should say. So, this is something that's really weighing on people's minds. I think a lot of people don't know what's going to happen, but that's why everybody's nervous, because it's really hard to predict at the moment.